Hey, welcome everybody. Welcome. I love the smell of napalm in the morning. Oh, yes, there's damage out there. There's fear and loathing, but guess what? I'm here to tell you it's not actually that bad. It's not actually that bad. There's going to be some real opportunity. These are the opportunities. You have to be counter-cyclical. I find myself being in the doomsday point when we're sitting in suspended, ever-mooning BS state, and I start to get interested and excited when we start to have a little bit of sell-off action. That's right, it's good, it's healthy, they'll tell you. It doesn't feel so healthy. Squeezy, squeezy, Japanesey is one of our favorite sayings, and boy, have the Japanese been in the mix here. We start off with the Nikkei 225. This is not up to date. I think there's been a little bit of bidding up, and I will switch to a different version for you, but I've done an elaborate draw on the Nikkei. Yes, you got the Nikkei down. Many people talking about the Nikkei. In fact, there's a couple of things that are very, very specific to us. We have been speaking both to our crypto friends. We need a demand-destroying event before you can get the fundamentals that will drive your Bitcoin. People didn't like that. We kept saying, look, generally you're a bull market, but there's a wild card here that still has to happen. And just for that on Bitcoin, it would be mentioned Bitcoin nice and early as well. People forget that you had to have this event here before you got that event there. That was the spiller, the absolute thriller that gave them the excuse for print, fundamentals, get Bitcoin back up. It took 7 trillion into the economy, whoa, and of course a quiet 23 trillion to banks, some of which were European as well, but they didn't tell you so much about that. They didn't want to tell you too much about that. So what is happening is we've had this wild card. If you go anytime and talk to us, we've said, hang on. There's a demand-destroying event that has to be played out. If you put demand-destroying event in our video, we're the only ones here that have got that phrase. It's our phrase, DDE. We like a pair of Ds generally. The demand-destroying event is here. Traditional crypto markets here. That was just a couple of days ago. That's 10 months ago. That's 6 days ago. This is a year ago. We've been waiting for a proper bloodletting. That is what's going to now allow the outcome and the bottoming that you may get to give you your alt run and all the other things that we're saying. These things are coming, but the Joker is still waiting to be dropped out of the pack. And you can't sleep easy until the Joker has been dropped. And now the Joker's dropped. And that is good news. It's actually good news. All the people that had short time frame upside setups, they'll all be unwinding. You're getting this big bloodletting. But this is actually good news because it'll allow you to put on great entries on our favorite trades. That's right. For example, back on the short yen trade, we will get that trade back on, by the way. Let's have a look at the Japanese yen spilling its guts. So in our Substack, in fact, we've been talking about this in the community for a while, that a lot of things were unwinding. We gave you 3 reasons why things were going to get more intense. In fact, by the time this went out on 26, we'd already been, July 26, we'd already been talking about this for 2 weeks in the community. And number 1 was actually copper spilling. I'm going to come back to that. Number 3 was the beginning of an unwind in the USD JPY. It's got a whole bunch worse than that. Let's go and have a look at the USD JPY. That's right. The macro market criminals that borrow super cheap in yen and then speculate in leverage, they were getting high on the hog. This has come down harder there than it even managed in October. This is faster, it is more extreme, it is more violent, it is a throwdown, it is a proper puke. That is the USD JPY, down. Since it began its upside trend here that ran our targets on upside HVFs. We had upside HVF setups on the USD yen. We had upside setups on gold versus the yen. We've had the yen call weakness trade has been our trade. But eventually everybody crowds onto the wrong side of the ship. and the ship does tip. And then what happens? You have to unwind that whole baby. We'll be getting back on this there very trade in due course, but you need to allow this to bottom, a little bit of wicking. This is a portfolio trade, especially when you enter well. Just as a reminder, if you entered over here, you are still laughing at this point. You are still up. You are still even getting paid by certain spread bettors. Because you have a very low interest rate of carry. You borrow cheap and you short. This is the currency for putting back on when this process is done. And actually, I don't think that's too far off. Everybody going, oh, the biggest, a lot of hyperbole. In percentage terms, this is not big. In absolute terms, in this hyperinflation world where everything is 5,000, the SPY or the NASDAQ, I don't even know. I can't even keep up which one. The Nikkei was as high as, 40s, 50s, 60s. Everything is absolute bigger in absolute terms, but in percentage terms, it's not that bad. We're going to get this opportunity to get great entries in, and it's going to be you need it to get worse, a little bit worse. First, because by doing this before the election, they're probably ensuring that Trumpy will jump on. He's going to be jumping on the economy train like nothing. You see what happens when Kamala's put in charge. The dumb old cow hasn't had a few days. She hasn't had enough time to break it. But nonetheless, it's Biden and Kamala. They've all been doing it. They all have. They all extended the overdraft. They're all liars. The left, right, they're going to play that game. And the politics of it all. But the truth of the matter is this is a debt-based collapse. And I think this isn't the one. I don't even think this has the scale or the movement, the sign of a bit of bid, unless we get a weak rally and another, and that would be the leg 3. So if you have a down, weak rally, and then another throwdown, boy, then we could be talking the big one. If this is looking like it and you're getting bid up, we could start bargain hunting in the not too distant future. We don't want to be too early on those bottom calls, catching the falling knife. Be careful, be careful. But if it doesn't go for a Mark II or Mark III, then we will potentially be in a realm where it starts to bottom. Is that enough to call a bottom? No, sir, it most certainly isn't. This is convexity and rolling. I'm just warning right now, I don't think this looks like the absolute huge reset. We would need a rally and a stage 3. Now, if that were to happen, the next fall is bigger than the first fall. It's Elliott wave. That then would be, whoa, the big boy is here. So we're going to have to make a decision. Do we get a snapback rally of quite some bounce, and that would have to show in the momentum, buying back? Or do you get a weak grinding up rally that could set up the leg 3, leg 1, rally, leg 2, and then a leg 3. That leg 3 will be longer in range than this. And then when they start talking in percentage terms, it's as big as the 1987 crash, it's as big as the COVID crash, it's as big. Then we're getting into a point where that starts to be, the scale of it starts to be normal. In actual fact, the scale of this so far, if it ended here, is not even bigger than what happened in 23. That's a year ago. That's not interesting. That's not 1987 in percentage terms. That's not, subprime. It's not any of those things. So for now, you'll say, okay, it's a good correction, potentially an opportunity to get some longs on. We're going to have to determine if that's the bottom. So USD, dollar, JPY, very violent to the downside, caught a lot of people wrong-footed. Maybe a lot of people had to unwind some leverage on that. Let's see how it turns out. What else was in the indicators? The other indicators was copper and the yield curve inversion. So in that Substack, we said 3 reasons why things are going to get bad. And by the time, as I say, it went out, we'd been discussing them for a couple of weeks. And one of them was the unwind of the carry trade that had already started. We spoke of copper sell. So we're going to go check out that commodity. It was turning. It was turning down hard and fast, earlier before the crash. You could have got out, you could have got shorts on, you could have put some puts on if you had been paying attention in our copper update trades. That started. You got a big rejection, a bounce, and a further rejection. Actually, this is starting to get a bid, and it is not even in the scale of this correction of 22 and 22. Not yet. And you're starting to get a little bit of a bid up. That little bit of bid up, though, you got to be careful. It's not a bottom necessarily. You can get a rally, and then you can get the next leg. So it's only the bottom when it's the bottom, and you see it there. Normally, with big volatility, big hammer there as well. So you can go down lower, but right now, is it an absolute calamity? I would say no. I would say this is a chunky correction in the inflation everything. Don't forget, inflation. Inflation. Who's creating the inflation? They are creating the taxation on you in inflation. That is the bidding up, the proliferation of money that sees all things rise up. Of course, in the chart, we did the high-grade copper divided by gold, which corrects for inflation and the additional fear of debt devaluation. So we've got to talk about gold in all of this, and we're going to talk about a lot of markets in this update. And you can see that this is continuing to throw down, and every time it's thrown down on a big time frame has been typically associated with a major correction. Of course, the super recession, which was in fact a depression, that is the dominant one, subprime. That was your echo recession that occurred in 11-12. Over here you have the Shanghai Accord that bottomed at 16. That was China going bust. Over here you have the CV19 event. And now you are getting the everything bubble. Have you noticed how regularly we get major economic crashes nowadays? It's because you are in the tail end of a debt system that regularly needs new life pumped in it in major surges of proliferation. They are keeping a zombie alive. They are keeping a zombie alive. There was the .com one by reference. They are keeping a zombie alive until they're ready for their total controlled demolition of the economy. And that is when they will be ready with their, you can bet your life, your UBI. They want to crush us all small businesses. They don't want you to be self-reliant. They don't want you to own your own land and have your own food supply chain. They don't want any of those things. You must be reliant on state. It is a global, technological, oligarchical communism, Bolshevik communism that they are after. And that's what they aim to do. And you are going through the staged theater that they manage. Now, why, and let's talk oil for a little bit, because we are short oil and we talk, and some of you might say, but the warmongery, because guess who's doing real well right now? Guess who's doing real well right now? Now let's put in the MIC, and you will find for yourself, let's maybe do it, write it all out. You will find that Lockheed Martin, complex, okay, damn you. You'll find that Lockheed Martin, Raytheon, and all of them. There's the tweet, somebody's got it right there. Whilst everything is crashing and they are escalating, and you know who in the Middle East is ever expanding its military aggressiveness, provoking every possible nation from Lebanon, Iran, Egypt, Syria, Palestine, you name it, they're there, they're ready to create the war so that they can stand back and the Americans, their proxy, can feed some goy meat into the mincing machine. Yes, that will be happening, and who's smiling? As I've said from the very beginning, straight out of the reset sniper part of the brain and the head, their goal, their extraction mechanism for getting greater wealth and impoverishing everybody else. What is the primary technique and tactic? It is entirely war. They own the military-industrial complex. They pump up those shares. They create orders for essentially what is a fireworks display that everybody gets to watch on TV. Unless, of course, you're there, then you find out it's quite a deadly fireworks display. You pay for people to burn gunpowder in very fancy, sexy ways, and they create ever more debt, devaluing your currency, creating a natural inflation, holding the oil price when actually there's a very little consumer and retail demand. The consumer and retail guys cut. They've done 2 or 3 production cuts to hold up the oil price. Now they're talking up a major Middle Eastern escalation with American ships going into the Eastern Mediterranean, etc., etc. You're seeing things on Twitter involving Iran, getting all sorts of responses to a leader that was killed. By the way, small note to people, the Mossad, the people behind just about everything, planted explosives 6 months before in the apartment that the guy was going to be living in that they killed. That was planned and rehearsed over an extended period. For those of you that think they're people that wanted Trump dead, they usually get their man. Ask the Kennedys. So this is all theater. This is all theater. And Lockheed Martin, there you go. Who else is having a grand old day? Raytheon Corp, there you go. Who else? Northrop Grumman, grand old day. General Dynamics, grand old day. I'm pretty sure it'll be the same for BAE and many others. So you can see, as we always said, you need your FU portfolio, your hold your nose portfolio of statist extractors, and that is exactly what they are. In times like these where the citizen has so little and is really being squeezed, they are gorging, they are feasting. And who's racking up those orders? The state. And what are they paying with? Debt, way above the income that they're getting from tax reserves. What's the consequence of that? Devaluation of your currency and a debt collapse which will destroy your pension. That is who is getting hurt. You get taxed from below up, that's the inflation. You get additional taxes from above down, that's capital gains tax. And the Democrats want to do unrealized capital gains tax. Oh my goodness, how about that? This is it, guys. This is how you impoverish your people. Currency destruction by spending through a few unique megacorps. This is corporate fascism into communist Bolshevism. That is where they are taking you. Have no illusions. So back a little bit to crypto. Actually, I think this turns into a buying opportunity. Ignore, what have we got here? We've got Bitcoin Tether. This on the bigger time frames, if we get a decent enough correction and we get rates dropped and maybe even a bit of QE, we don't know how bad it needs to get. This is typically continuation. In the same way we called upside eventually will occur here. And you got that snapback rally. Not as fast as it went down, but in the end, the need to pump up the economy came, and boy, did you get your run up to the 64. This is the exact same. We are the masters of broadening structures. I'm seeing a lot of people now saying, oh, broadening and descending. They're taking our phraseology. That is a broadening, descending, but they don't know. They drew it like this, and they go broadening, descending, but they don't recognize that that's as a sample in their tweet is actually on a downtrend and a bull pole. That is also a bottoming price behavior that eventually sees up, but this is not what you're on. You're on a bull pole with a descending, and that typically means continuation. So it actually makes these wicks here look like good buy entries, good potential buy entries. I think crypto actually is now offering you good buy entries, potentially. Don't rush in and do it right this second. We need to make sure it's over. But on the big time frame, this collapse so far, that single candle, is small beer in comparison to pandemic. There's a word that just damaged the YouTube stream. Go and hit the like button and leave a comment right now because I had to use the P word. That's right. Go and ensure the schmoogle doesn't stop truth from getting out because people use language they disapprove of. Disapprove of. That's right. Smash that like button for that. Go and hit them. Fool the algo fully. Break their systems of subversion. Anyway, so that downward is actually a continuation. It's an increased volatility continuation, and one has to treat it with care. But actually, in overall, this is starting to show support. There will be a reduction in volatility coming, and I think that this is more likely to be the one that blows over. But remember, a weak response in rally, which can happen, no coming QE or anything like that, or they don't really bring in the rates cuts that they've talked, the market's probably now starting to price an emergency meeting with the full half cut, which is what might transpire on the Fed. If that happens, you'll get a rally. How hard do you rally? We'll have to watch. Is it going to be a sell the rally for a deeper off, or is that going to be bottoming? Is it going to be bottoming? And I think, I'm not so sure we've got many more legs in this, but you've got to bear in mind, if it is just a weak response to the inevitable rate cut and further guidance of more, they've got a problem, Jay Powell. They don't want to look like they're crashing the economy too much on the Democrats, because then it looks a little bit like they're playing the Trump game too hard. They want Trump in, the Zionists want Trump in, and he will all likelihood get in, and there'll be no further attempts on his life, which should mystify you, because if they really wanted them dead and they failed with their patsy shooter and all the other shooters, why wouldn't they be trying again? So you have to realize that there was a whole bunch of funky-ass theater pulled on you, and it was all about engagement. That's it. That's all it was. Anyway, so we're getting bid up. We're getting bid up here on Bitcoin. And overall, I actually feel that this is a even short-term trade. Take it to the long side. Be ready to get out in a hurry if the market gets disappointed. So you're going to have stops. The worst and lowest stop would have to be at 48. It's already moved quite a bit off there. You could probably do better. This is a big rejection now on Bitcoin. By the way, another key comment we made on our crypto channel. If you are from the crypto realm, talk to us. By the way, one of the key things, and let us know if you're here for crypto, one of the key things we said that still needs to happen is Bitcoin dominance has a final smaller time frame upside target to make. And we're going to show that to you. We said there's one more in it. Many of you might recall we said there's one more in it, one more move up before we get alt dominance, and it's great that it's come with this additional crash, because here it is. And in that target we see just under 58.50 in the overall target there. I think it's around 58.33. There you go. We see this, it's rejecting now at the second interim. That tells you alts will start recovering a little bit more than Bitcoin. However, something to bear in mind. You could have another selling off binge, because this pulls back, bounces on the first interim, and then it goes all the way. This breakout has actually occurred on crypto weakness. The breakout has occurred on crypto weakness. So to make 58.5, approximately where we just threw the target that we see, there could be a second stage sell. Or Bitcoin turns around and starts recovering a lot harder than alts. So you should understand that right now, dominance is going to be accumulated on the shorter, this very right in front of you time frame, more by Bitcoin than anything else. So it could be in two ways. They go down again, Bitcoin less so, as the lower beta of the cryptos, or any mixture of the two, or Bitcoin starts reversing harder and the big money is coming in on Bitcoin. Trump is going to make Bitcoin a state-based asset. Did you hear that? Oh my goodness. How about undermining treasuries and dollars? How do you say undermine treasuries and dollars any better than a president that's going to start putting an alternative forward for state-owned collateral? How about that? Remember when Bitcoin was all about liberty? in the early days, and freedom from government and state. Now you're relying on Lowell's Finkelstein of BlackRock. BlackRock is the new vampire squid. I mean, Goldman Sachs now is little pippy stories for the little PEDO extractor community. They are now, BlackRock is the peak vampire, my friend. It is the bloodsucker of them all. And your freedom that was supposed to come with Bitcoin, is reliant on Donald Trump presidencies or RFK and the likes versus Kamala Harris and BlackRock. Oh dear. That is not freedom, my friends. That is a captured, indentured slavery of digital nature, for which you should all be avoiding. Anyway, that part aside, how do we make money? And that's what you want to hear. Well, I think you're going to get a little bit of an alt recovery a little bit now that Bitcoin started to stop going down and had that big buyback wick. It traded a 48, so we fell into the 48. And now you're going to get a little bit of that similar recovery coming through on Sol and some of the others, and then you're going to get dominant surge again. That could be a second tier weakening. So you've got to watch, you've got to make sure. I don't know if Bitcoin starts suddenly going up quicker than the alts, if the alts are starting to go recover following Bitcoin's cease to go down and its buying wick. And that could be a second round of selling, these up legs to run. 58.5 could be a second round of selling. So what's the safest thing you do? You enter onto your favorite alts, which has shown relative strength. We are covering that in our community. Yes, we are talking about the dominance charts, the D charts, the Sol.D, the BTC.D, other alts.D that we have been liking, that have shown relative performance, and highlighting the ones that have been continuing to shed dominance, that are untouchable, that were once big and are still fairly big but going down. You've got to look at those dominance charts, and that's what we do. You can click the link below and book yourself a self-study. Participate with us every Sunday and get all the course materials, get up to speed, and later, once you've done some good stuff, upgrade to being a full-time member of the Trading Metamorphosis community. First link below. Don't forget, gold. We need to talk about gold. Purchasing of physical gold, my friends. Lower beta than crypto, not digital. You need to have non-digital wealth to carry you from the old system to the new. Yes, you do. And they're going to eventually make it harder and harder for you to do. So get in. Let's have a look at what's gone on there before we come back and look at some of those cryptos. So we told you, copper down. The yield curve inversion, I must finish with, I must do some yield curve inversion stories with you. We got a major spike in the yield curves. Yes, we did, sir. We got a major spike on the primary one that they loved most. In fact, it looked like this. I'll show you on an unlogged basis. See that wick? Wow, in percentage terms, that's a super move. And it crossed the zero. I'm going to put it back into log so that you can see that. But the most important yield curve reversion has now touched the zero mark and then sold a little bit off. This is a beginning. And that's why I say the Bitcoin to the 58.5, we could have another wave of down. I think we're not far. I don't think it's an Armageddon thing, but you could have another wave of down on your crypto markets. Don't rush too soon. Wait for that Bitcoin dominance to have blown through 58.5, and you will hear the reason for this crash. It gets its name. At the moment, it doesn't really even have much of a name. It's the everything bubble name. It's the demand-destroying event name that we gave it, which we don't know why. It's just the continual weakening and the high rates and the proliferation and the deficits and the bad finances of the American policy name that is our friend Granny Yoda Yellen. Little Yahudi, she's been churning out a trillion every 100 days to ensure she destroys the American economy. As for the Western economy, you had your UK riots, by the way. Isn't that so interesting that just as a military East, the usual friends are going around finding a terrorist in every nation to bomb, you have a sudden breakout of Muslim man bad against indigenous people. Who were the people that brought all the immigration people in? Think about that. All these things are being timed to coincide. This is orchestration, guys. This is orchestration. It's not organic that these things all coincide at the same time as market turmoil. This is shock and awe. This is financial. This could be the drill for a much bigger one. It could be the bigger one, and we get a calm period, and then we escalate even higher and harder. Who knows? But it is no coincidence that all these things are coinciding, flaring up right now. And the yield curve on the financial indicator dispassionately tells you the time is coming economically. And the demand-destroying event, the phrase we named, and we warned with everything we had to say. We said there's a joker card waiting in the wings that can spoil every long and could make every short come home in a day. And that joker card is the demand-destroying event, which is foreshadowed by the fact of the yield curve inversion. And critiques of the yield curve inversion, we brushed them all away. This is key. And the sell-off in copper, which is high-grade copper, is an early warning of lack of demand generally for all forms of construction. And then we highlighted that the yen was having more than just a small pullback, but that was escalating. This is all before these big sell-offs. You could have got more defensive and saved much of the downside. You might have even got some shorts on in the likes. Let's have a look at oil and gold, because everybody's going to want, and I'm going to refer to your comments. Community members in the house as well. Alexi, any questions from our good community members while I get in on the oil trade? Not as yet, nothing noteworthy. He'll keep an eye on those. All your questions, in fact. So what do we have? We have a breaking on oil through this flat base. We have a breaking. But there's no follow through just yet of any great momentum. Some of the sting is being taken out for a bit. What has bid up the oil is the escalation in the military. So at the same time as they're killing the economy for the normal participants, the non-psychopaths, the non-military industrial complex workers, the non-consultants to the military industrial complex, the quangos to government, to dark state, the CIA, the MI5, the MI6, all the non-psychopath industries are being squeezed. But they create this war thing and they try get a little bit of a bid back under the oil. But will they be able to save it? Is there a chance you could see the 32.81 on a big shouldered, and we call that the double shoulder in essence, head and shoulder? Is there that possibility with these key levels at 65 being eyed up? If that happens, that would point to another down leg of fear. And it is possible. So we are saying, here's all the different scenarios. This could be it as part of the primary leg. Typically, you get a period of calm and then new information. They'll do the double rate cut either at the next event or they'll bring it forward. And then new information on the frailty of the economy comes and you get a second wave of selling. That's the one danger that people getting into soon must watch. Stop losses will be absolutely imperative if you take a high risk entry on getting into the USD JPY, the Euro JPY, or Bitcoin at these lows, etc., etc. Second wave sell-offs. Keep that risk tight. And maybe sit back and see if we're going to get a second sell-off. Because this is threatened, but it doesn't have to happen. It doesn't have to happen. It can just drift and come back up. The minute we run through that point, that is deemed a failed pattern. There's always a level where we accept we're wrong. Going back up to $84 there's no downside for the oil. That pattern has broken. So that is how the world is. You know, it's not a guarantee. There's probabilities. And as they are, the new data is coming in, the probabilities vary and shift. And we are going to keep reading them to see. At the moment, we suspect that you probably had a triggering because you've broken that low. However, it wouldn't surprise me to get a rally back up on news, a little bit of Iran action, a little bit of reprisals, and then maybe another bit of bad financial news that will come rocking in, and that could bring you down. By the way, this structure's target is in and around 52. However, the bigger, larger head and shoulder target would take you to a totally different level, and that would take you right the way down to 32. And that is, of course, very disinflationary and would allow a little bit more in the terms of rate cuts. What have we always said? The rate cuts will not be as big or for as long as most people imagine. In short, the debt market will not turn and go up in value to the previous highs. So you may get your rush 2 cuts, and you may get promised another 2 cuts at the next, so you will have had 1 full percent over there. It gets much harder yards to do that, because who is buying the record debt? Don't forget, in this downturn, tax receipts dive, they collapse. Borrowing goes up on top of Granny Yoda Yellen with her 1 trillion every 100 days. That's about 3.6 trillion a year, going on 4. With this downturn, they're going to have to do more support, more handouts, more spending for all the consumers that are not spending. So it wouldn't surprise me if you're knocking on the door of 4 trillion in total to keep everything going. And any reduction in oil price will bring the inflation number quite strongly down, temporarily, which may allow them a tiny bit more in terms of rate cuts until you get the snapback on that oil. Until you get the snapback and any form of normal economic activity, even at a much lower level, you will get a snapback in oil, and that will make the inflation bounce very quickly back. And the problem is your debt markets. As much as people expect, let's go to TLT. As much as people expect, this is the one we shorted in the original sense that made its head and shoulders target. Since then, we've not been in it. That's your up move so far on TLT. This is from whence you came. There's the top of your head at 180. So, whilst people may see this as an asset class of interest, my opinion is stay away from debt. Could you get a trade to the upside if there's more cuts and it accelerates and there's more? Sure. Am I going to play that game against this correcting trend? The 40 years of escalator, as I've warned, could be over in 6 years of elevator. I don't want to be caught with a sudden debt collapse right here, right now. Let's have a look at some of the comments, by the way, over here. I've got you on the old fold. Here we go. Sorry, guys. If I could delete it, I would. Okay. Why the need, the people, the wicked people? How do I get some time to get a timeout because of them? Go far away. Go far away, go rural. Don't get me wrong, I like BTC, just commenting on the reality of the market forces at bay. So high volatility asset classes in times like these are likely to cost you money. Let me just say that again, top tip. High volatility asset classes, of which crypto is certainly one, are likely to cost you money in trading during this time. Most people don't understand that stops get run. And the higher the volatility, the further away they need to be, and then the sizing needs to go a whole bunch lower. Expansive volatility moments is the direct inverse of HVF method, which is contractory volatility moments. So if we go to gold, the entry was here on a squeezy, Japanesey, yes, indeed, there, because you got to have a tight stop and a major run. You see that? That's the difference between high reward, low risk, from low volatility to high volatility expansions. In gold, it's not excessively volatile, but you can see that you're tapping out a little bit around here. Our overall opinion is a gold long, oil short trade could serve very well, providing This isn't all about a military-industrial escalation. However, it seems like there could indeed be quite a bit of military-industrial escalation in part of this. So gold is better, generally. Gold is better and is a substitute for inflation and debt. They'll say inflation's about to go down. Well, gold's supposed to go up on reducing interest rates, and it goes up on the increased likelihood of debt failure, which is now rising interest rates. So given we're at the fag end of this economic cycle, gold goes up. Gold goes up either way. But when you get a cutting cycle, it's well supported. So overall, technically, it's not amazing. I'm not going to tell you technically it's now amazing. That was your trade there with leverage. The rest should be investment. But overall, we think it will work itself out. You see that volatility bid straight back up. Bit of a bid coming back up. So some of the people are countering the panic, both on Bitcoin and on gold. You can see the volatility here in the last few days. I mean, it closed at 2,444, and 1, 2, 3 days later, you're at 2,405. You know, how bad is it that you've dropped $40 on something that is 2,445 3 days ago? It's no big scare, and that is the safer place for you to be investing long run and potentially picking trades until we are of higher certainty of any possible turn, and that the rally and next leg down doesn't come in, because then you could be in a 5-leg situation. That means you've only experienced one of 3 selling legs, and those buying legs are usually small, or they are counter trend continuation patterns. So that's the danger. Just make you all aware of the danger. So having warned of a demand destroying event needed for the last year, 10 months, 6 weeks, 3 weeks, in our Substack, by the way, don't forget to go and find Substack and join over there. The 3 indicators that we were telling you about over a week ago, about 2 weeks ago, that said the recession is about to deepen and get sharper, which is a call to get more defensive, which would have seen you do very well. It would have seen you selling your Apple shares with Buffett and everybody else. So we should have a look at some of the other stocks and the indices, by the way. The indices so far, they're not as terrible as people make it sound. Look, when you look at that chart on a daily, that is a puke. That is a proper puke. Let's have a look at that. We're at 15,000. We were at 18,000. But in terms of weekly and monthly, let's take off our head and shoulder. This is when we were warning, when everyone was David Hunter saying there was a pump. We said you've just had a pump. You're in a head and shoulder for a down leg sell. Don't buy the long here. You're going to get a correction. We got that correction right. It made its head and shoulder. Since then, you've reflated. This is where you are for the month so far. Okay, it's only 5 days of the month, so it's pretty dour, but it does seem like it's been bid up a little bit. Let's have a look and go weekly.
Comment by
the Sniper Prodigy for the yen, I see a right shoulder that can form to bring us with final down leg to 125s. Yes, that would be awesome. That would be awesome if we get that and confirmed. I would load up with the yen, because at the end of the day, the yen is not paying a proper return in lieu of global inflation. It is guaranteed destruction for the currency. So look, it's a violent throwdown, but so far, in absolute terms, that's it. And if you log scale that, you can see why I say you don't have to. People shouldn't be slitting their wrists just yet. People shouldn't be slitting their wrists just yet. I mean, look at what you had from 16,000 all the way down to 10. That was 6,000. That was 6,000 of 16,000. Down to 10. That's a substantial correction. It's yet to be even clear that that's going to take any form of that scale from 18,000 to where we are now. So in the monthly, the bigger time frame, go up to the bigger time frame charts. This is panic selling. We highlighted, by the way, that this was a broadening structure and continuation. You see that? That's what the people who think they understand what we do don't understand. Bear pole, ascending broadening structure, continuation to the downside, because that is a rally against the general direction of a new trend. What do you get? An absolute puke. That's the difference between knowing what you're talking about on broadening structures or not. US Fed Loan Officers Survey. Respondents report stable loan standards for consumer HELOC loans, tighter standards for credit card consumer lending. I don't know what that nonsense was about. They'll try to tell you how awesomely strong the banking system is throughout all of this. So, so someone was talking about the yen. Anyone remember cliffhanger game on The Price is Right? No, I missed that one, sorry. Or do I buy water? No, just collect it. Collect it, it's for free. Just keep collecting it. Get rainwater harvesting tanks on your gutters and collect it in the ground. Get yourself a nice 10,000 litre container with a pump and just keep collecting it. Don't pay unnecessarily for things that you don't need to pay. They do not own the rain, not yet. They're going to try to tell you they do. So this is the USD JPY. We go back to that community question. So what he was potentially saying is that it's a superstructure. That structure, I believe, is what he's potentially saying. And that runs through like that, and that you've technically got a very nasty head. Now, were we to get a weak rally to here and down there, that could indeed set up a very brutal head and shoulder. That still remains to be seen, but were you to get that, then you've got quite some way down, because as you can see, that's 162, that's 142, that's a difference of 20 yen. That would take you to around the 122s to the downside. On a normal projection. That would be real value. It depends how much they've been borrowing yen to speculate on Nvidia and the NASDAQ and property and everything else. How deep do we risk off? We don't know. We don't know how far gone they've done. So this is a possibility, and this is a very ugly sell-off on the USD JPY for the daily time frame. So a weak rally could be a short sell. But let me tell you, if that's happening, Bitcoin is going lower, a whole bunch lower. The high beta. Your other crypto is going lower, a whole bunch lower. That means you're not doing a one leg down, you're doing a rally and a sell-off and another rally and probably a final sell-off for a 5-wave down. So you're either doing a three leg down or you're doing a 5-leg down. And that could be brutal, brutal. And if the next leg down, it will probably be bigger in many of the, particularly the higher beta charts. So typically wave 3 is 61.8%, 1.60, the same size as the first leg plus another almost 62%. Typically is the geometry that you get generated by that. So that would be very brutal indeed, and that would mean, the winner of that election, isn't he going to get a poisoned chalice? I said he, it could of course be a she. We're still buying silver. So point on silver, let's go back to gold and talk gold and silver. So gold has been doing rather well, XAU, USD, relative to other things. Silver less so. So let's clean our face. So when we divide gold by silver, this is coming along and we're getting quite a strong spike back. And what that means to me is one of two things. That was our break to the downside, which was quite an important moment. We first faked and then we broke. Now we are getting the greater risk on the monetary system, see gold get more support, and the industrial element of silver make it tiny bit like a little bit of copper, a tiny tinge of the copper element. So if that is not going to be a breakdown, do we have other technical structural possibilities for this? If that were to fail. Now this could all be a return move and you could throw it back down. The minute you start going above this, I would say that's a failed pattern. This triangulated squeeze is a failed pattern. You broke the grind line, fair enough, you rallied back, it was all done. The framing might change. The framing for this might change if that were to happen. So I would show you that and that, or even maybe refine that line a bit like that and say you have something different going on there, which could see gold continue to be the outperformer for a while longer. And for me, I would say in those circumstances, you want to be gold. So the one thing I've been saying a little bit more of, this is a lengthy process. The God market is gold, and much like Bitcoin in BTC Dominance, where the dominance is going to probably run 58.5 and might go a little higher still if we have a bigger sell-off. If we have a wave 3 sell-off, a rally, and a wave 5 sell-off, and this turns into real big shakes, and we start to, in percentage terms, be all-time corrections on stock markets and various things, then you could be in a set of circumstances where gold is outperforming very strongly, and silver will give you a once-in-a-lifetime buy opportunity on weakness, like the $11 of COVID lows of silver, which traded 11. And what you could indeed see is more upside for gold on the gold divided by silver ratio. Whether you'll get back up to these highs and make a double top is not clear, but were that to happen, gold is going to be the boss of the precious metals. Gold is the substitute for debt collapse, and silver will be suffering on account of solar demand, EV car demand, all of that which will be going down, for which we owe it to ourselves to look at Tesla as well as Apple as part of this entertainment morning. It's an entertainment morning. We've got the barbecue on full napalm at the moment. We're popping the marshmallows and putting some pride banners as fuel there on there, with the transgenders being on the pig steak. And we've got a couple of them. There's a boxing transgender that actually was fighting another boxing transgender for the female boxing of the year. I think that's unbelievable. They're mocking you so much nowadays. It's actually... It's hysterical. The theater. It's all theater, my friends. I mean, that whole opening ceremony and everything, it's all mockery, and don't get angry about it. Laugh at them. Laugh at the ridiculousness of it, and just make sure your children are not being schooled by the same people. So let's go to... Are we waiting for a worsening credit event to load up on miners? So miners comes last, guys, and I'm hoping miners are busy getting cheaper, but miners comes last. This is a good time, I would say, to get gold, unless we are bottoming now and the next day or so. And it's going to be difficult to tell that. You'll have to snap back pretty violently for me to get convinced of that. So I'm a little bit, be careful. Part of me thinks there's a bottom here, and part of me thinks I don't want to drag anybody in too soon. And there is a set of circumstances that take us a bunch lower. The contagion of this could bring in banks, could bring in credit, people not paying their credit cards. You could get second wave effects that could escalate this whole agenda a whole bunch more. So we're going to watch. I'm not going to commit you one way or another to buying a so-called bottom here, but miners will be hurt badly by this. What's the ETF for miners that we like? I know we got HUI, I think is one. No, it's not. There's an ETF for miners. I would be interested to see how it's doing. Drop a comment in below if you know the one I'm thinking of. I'll just put IA in the meantime. which has actually been a relatively strong stock. That's weekly. Let's have a look at it on the daily. Yeah, not too bad, because it's pulling out a fair amount of gold. I wouldn't want to see First Majestic right now, which is very dominant silver. You can see that's a much worse puke. That's a bad sell, back down to lows. What was the ETF for mining? GDX is one, yeah, thank you. Let me put that one in. GDX, let's go ahead and knock him out. So, yeah, gold probably done better than this. So technically, what's this show? This was always showing us bull pole, but an ascending. This is showing us not a good environment for longs, for gold. An ascending. So, you know, this is squeezing higher on increased volatility. So this is bad, and you normally need to sell off or square up. And what are we getting? A sell off. You've touched the bottom, and now you might need to square up. The fastest and best way you fix this structure would be something like that, a reduction in volatility after you've had an expansion. So kind of a bit like a diamond structure. You've had a broadening, and then you need to take it down. Then you could have a chance of going up. Most other scenarios, even a falling wedge one, which is one way you could also reduce volatility, involves downside. So most other structures will involve downside if you don't do that. So there's a dull period of sideways and nothingness waiting here on the miners. Unless we go wave 3, rally wave 5 to the downside, then you'll have a proper reversal. And that then could give some bargain basement buying. Again, I would enter gold first. And I'd even wait to see silver recover unless you're choosing a pure gold miner. So stay with the God market. Remember that Bitcoin dominance. Actually, the best growth has come most consistently. If you eliminate Sol and Ton on the crypto markets, most of the alts are doing poorly in crypto. They haven't made their new highs or anything like that. And actually, it's been a dominant gold, Bitcoin story. It's a similar thing for gold. It's a gold, the commodity dominance era. It will turn, but this might be a longer, more protracted cycle than most people realize. They are going to flatten the whole planet. And the hardest hit are going to be the Westerners. That's what's happening. And you can see with all the discord, the civic unrest and everything, the martial law rules, the biometric facial recognition that's going to get rolled out to stop the right-wingers, you know, in all of this stuff. This is a rolling, draconian totalitarianism that is coming harder for the Western economies, the UK, the EU, the America, than it is going to be coming for the rest of the world, although they probably will get a fair share as well. So in terms of all of this, there's a lot more to happen in this, and I think this could be, you know, one part of a much bigger malaise. So miners, no, not yet. You can do better. So short answer, no. Palladium has a huge, so someone's asking about Palladium. Palladium has a huge industrial component, and you've got the substitution back, you've got platinum is starting to get better favored to Palladium. So Palladium has been a major bear. We've said repeatedly on our channel, on YouTube, the one precious metal which we treat bearishly is Palladium, because it went ridiculously high. We called a number of major inverteds. You can see it's just a festival of lines, every downside target. And in it, to be honest, I don't like to be a crybaby or any ego. There's no ego in this, but we don't get credit for calling during a bull commodity market and a precious metals bull. We don't get enough credit for calling a major short on Palladium. And not recently, long time ago. And even saying you can hedge against that by going platinum Palladium. It is making new lows all the time. Palladium is 100% industrial, and it's substitutionable to a large degree to other platinum group metals. And now platinum is coming back. So platinum coming back a little bit, not to the extent of gold, but better than palladium, and you're getting it squaring up. It's also down on the day. It's got the industrial metal component. None of them are gold, but it's turned its corner here. And if you look at that platinum versus palladium trade, you can see that palladium has just been a bleed out. And we gave this to everybody. You could have been long one, short the other by the exact same amount, and all it's done will have gone up, up, and up for you. So and that YouTube is at least 18 months, maybe 2 years old, and it's been out there. So you should have been long in there, and that's where it is today. So you went from 0.4 to 0.43. That means 0.43 of a palladium ounce bought you a platinum ounce, to now needing almost 1.1 palladium ounce to get you a platinum ounce. So, you know, since that's October, November 2022-ish period that we were calling that, you've more than doubled. You've gone 0.42 to almost 1.1. You're going on for a 3x in your relative outperformance inside the same platinum group that you're essentially delta hedged against the demand-destroying event. By the way, you've just had a demand-destroying event, and instead of losing money, you actually gain some. They're both down, but you gain more on the platinum, and you got more on the palladium short than you lost on the palladium long. So you're making money in a collapsing market. So that is such a beautiful delta hedge. I mean, I'm just answering a reply here, but I just small point out that, you know, we've technically called that long ago, a long time ago, and there's nothing that's changed. That was a macro, big ass, super reversion to mean, and palladium was the star. Palladium was ridiculously valuable at one point. Yeah, more hybrid car hype, less rectal cancer. I almost bought it at 190 in 2009, says someone. Bought a bunch of constitutional silver instead. Yeah. So how's mortgages going to fare when the bad stuff, the brown stuff starts hitting the fan? So let's cover debt markets, because the answer to what happens on mortgages and mortgage rates and the housing market is debt markets. And as I've continued to warn, and nothing changes, you are currently getting interest rate cuts. I'm going to remind you at some point in the future in a live stream, so mark this right now, what I'm saying to you. I will be reminding you that we said your greatest risk is the collapse of the debt markets and interest rate spikes. That's right. I'm busy telling you this just as you're about to get a 25 basis points and 0.5 basis point cuts with the probable expectation of further baked in. I am telling you that actually your greatest risk to you is the collapse of the debt markets. And how does that happen? It happens on rate increases, which is why I also showed you TLT and said it isn't going back up there. It isn't going back up there. So let's have a little look at this. What have we got? We've got a log-scaled US 10-year. You are not going back down to these levels. You cannot ever go back down to those levels. There is no bid under the debt. Nobody wants that asset. There is too much of it coming out. So this has been a bull trend that we called a turning, and now you are going to have a correction to these upsides. So you can see the 10-year is spilt here. And what I think will happen, there were some possible setups that we were drawing. You can see we leave all our draws on there. I think what will end up happening is you're going to get a falling wedge or a bear flag correction. So thank you for the correction. What's going to happen to mortgaging and housing? I think some form of setup like this is coming. And the net macro event risk is that. So as you're getting cuts, and as you're almost certainly to get further cuts, I'm warning you about exactly the opposite. This is a great time to pay off your debt and get unencumbered. If you have any loose, buy your gold, get out of debt. You've had lower lows before with lower highs. Here, boom, 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 and eventually you broke to new highs. It's harder to keep turning the screws when the retail economy is so wrecked, but turning the screws they will. So when you have these extreme moments of financial, we're going to have the whole financial system is going to become significantly more volatile, and there's risks in every way you turn. These guys have painted themselves in a corner. They've taken the better part of since 1913 to do it. So they've taken 111 years. Oh dear, what an interesting thing. 111 years. The Federal Reserve was established in 1913. They've taken 111 years of strapping you down. Your wrists, your arms, your legs, your neck, your everything. You don't have room to move. Everywhere is a bondage. Everywhere is a servitude. Everywhere is a slavery point. Everywhere. Until this whole system is cancelled. So you're going to have way more volatility. So it's harder to keep getting new highs on rates. There's a high, there was a high, and then here's a high. But you will wind up for a while, and then you will make new highs, and that will be the death of the property market. The asset values will go down. People being able to afford mortgage financing will become far less. Sales will turn into crises. I'm talking particularly, say, the US market and to some degree the UK. And what ends up happening is the buyer of last resort, the new black cube, vampire squid, zeppelin that is parked over all nation states, that seems to have bottomless pit assets, and will be doing the rebuilding of Ukraine that you are busy funding the collapse and the bombing of. They've already secured that contract, BlackRock. And they will become the buyer of last resort for the statists that own them, which is the City of London that goes back to all the big legacy families, and own the Fed and own everybody else. So that's where you are. And the debt markets are currently trading down. You've just had a spill. And you could even get down a bad spill. You could say run the 3, for example. But the long term, I would just keep drawing continuation structures. The long term is collapse of the debt markets. When you are in, everybody thinks we're in a bubble. The bubble is the debt, the creation of money. It's that simple. The bubble is the debt. Everything else is up on account of borrowing money into existence. The proliferation of fiat is the creation of debt. That is the bubble. That is why you are now experiencing eventually inflation, even though all these technologies that make everything so much more efficient are in actual fact disinflationary. You're still experiencing inflation. That's because of the fiat. And they lie to you in the stats as to how much it is. There'll be some of you that will be facing between 15 and 20% annual inflation, subject to how you consume and live. That is a sad fact. And they are going to put everybody, and the debt collapse means it ends in a spike of rates, just because of the nature of debt. That's your seesaw. Excuse me. That's the value of your currency, your dollar, and that's your debt. And for interest rates to go down, the value of the debt must go up. And vice versa. 1 second. And there's no way you devalue debt, and there's no way debt doesn't devalue, because there's too much of it and it keeps coming. So as a result, the only way is an interest rate spike, which is being inflicted on you by the markets who refuse to play the Ponzi game anymore, and they chase into gold and they dump all debt. And more people are realizing that, and the debt market turned in 2020, which was that low when you had a rate as low as it was. And nothing here is changing my mind, and I think this should be the most spoken about point. That is not. That is a blow off top in valuation and a spiller final capitulation, and a 40-year debt cycle ended. So the answer on property is, in due course, those asset values will crash and people's abilities to make payments on ever higher interest rates are going to get worse. And that is a big, big problem for everyone that has got any form of banking in your life. Get them out your life. I know it's hard. I'm lucky and I've been around for a while, so I'm not young like a Bambi anymore, but you can be debt-free. Miss the Reset Sniper. Yes, yeah, more Reset Sniper. We did an Odyssey update on the Reset Sniper. It's just there's no way we're surviving on YouTube as the Reset Sniper. There's no way talking about what we want to talk about. So I'm doing it. Do you think platinum has much downside risk? Platinum will be a bit like silver, only slightly less beta. So platinum is better than palladium, hence why the trade. And it is also, percentage-wise, it's less likely to have nasty percentages, being a higher number than silver. It's also a couple, I think Grant is talking about it. I'm trying to think, I don't think it's Jim Grant, the interest rate observer. I think it was somebody else. It could be Grant Williams, was talking about it very bullishly. Miners and Anglo-American Plats, basically. There is a real deficit of platinum. This will kill a bit of demand for a while, but there's a real deficit. And it's Russia and South Africa. There's your 80% market supply. And South Africa is about 69% of that, 70%. Where's the next market to move violently up? Well, you saw the military-industrial complex. Let's have a look at them again. Lockheed Martin, we have actually a list of them. Look at that spike there. We, of course, have an upside HVF. We've been talking about it in our community. And we have a target for Lockheed Martin that is yet to be run at 595. So the probability is you're going to see a 6 number on that upside HVF on Lockheed Martin. This is a vile stock that sells murder and weapons and citizen control, stuffed full of people that are supremacist, and it is a real hold-your-nose entity. Warmongery is their game, and they are part and parcel of a bung culture that arms deals and all sorts of dirty deals, and you really have to hold your nose and to own it. But there's another squeeze there that you can see is broken. You can see the squeeze was coming. Oh, where did it happen? At our second interim, which just happened to be localized highs a couple of times that you could just get a bit of support on for a short while before eventually squeezing up against it like that, and then bang. That's your next move. And you will do, in my opinion, on balance of probabilities, a 600 in running that target. So that's one of the biggest. But you know, Rayathon is there as well. See stocks. I can't spell it. Can't seem to get the US listing of it. Have I misspelled Raython? Maybe it's that. Is there an E or an I in it? I can't remember it. What's the stock ticker? RT, is it RTX or RLX? Thank you, RLX. Let's try it. I was misspelling it and being daft. That's actually interesting. No, that's not the one. Raytheon, yeah. RTX. I was about to say, it shouldn't be going down. Someone gave me RLX. There you go, broke up. Isn't that amazing? Isn't that so sweet of them? Big gap up, was trading up from a localized low at around 68, now 115. I mean, this thing has doubled since October 23 in 6 months. That's it. Thank you for the guys, RTX. Yeah. War is deception. War is theft. That's enrichment for all those that work in those companies and groups at the cost of the many. Death by 1,000 cuts. They kill your currency. That is how they will capital gains tax you, by killing your currency. That is why you need to have structures, by the way, to protect you from capital gains tax, from offboarding your future crypto profits, your equity profits, even your properties. If you own it in your own name, they will tax you. Death taxes, capital gains taxes. The best thing is to use the same entities they use, such as foundations, companies, and various other structures. To find out more about that, send an email to support@themarketsniper. How will you offboard your profits to a capital gains tax-free place on crypto? They are getting better at doing that. So a little bit more on crypto. Let's keep the crypto friends. So Sol, we spoke positively about. As with everything, the demand-destroying event was the wild card that had to come. The Sol dominance, funny enough, has held on. I'm going to put it on daily. But it got a little bit hyped, and then it didn't get the BlackRock news that everybody hoped. So the Sol dominance upside HVF survived just. So it will start overperforming again, but that could be still on a contracting market. That's the one risk. So remember, dominance is not directional. It just means it has to do less bad than everyone else. However, that said, I think we're going to get a bit of a crypto reflation spell. It might be a trap. It might be a bull trap of just a rally before a major smackdown, or it's going to be a fast rebound. So the funnel, and in fact it bounced on the axis of the funnel perfectly. This is the drawing tool for our community, and it goes through 4.46. And you could have just had it at below 3%. 3%. So 4.46, that's a 50% relative strength gain. That's high. That's high. And Bitcoin dominance, we showed you the Bitcoin dominance chart. There are other ones that are doing well on dominance. We cover that a lot in our community, but there's some that are doing terribly. I'll show you one that used to be popular but is doing badly. .D. That one just keeps spilling and losing ground. On the same time frame, absolutely shedding dominance. So, you don't want to be a holder of DOT. ADA-D, not so good this bull market so far. No, there's a lot of Cardano fans. Still shedding dominance. Still shedding dominance. Not good. Shouldn't be doing that. So ADA is not doing that great either. ETH has actually been a weakling and been almost twice the beta of Bitcoin. Bitcoin lost 10% on the day. Ethereum, hold my beer, we'll lose 20. So it's been pretty unspectacular. And we had a technical, this is when, these events are good because they clear the air for whether something's coming sooner or later. We've been watching this structure battling at the 20% mark. And we thought, okay, that could be a low, and it started up big. The talk of the thing. This has now run that low. That kicks the can. We don't need to worry about Ethereum for a while. To fix this, it needs to make a base, stop going down, and it needs to get back up here strongly and do that. So when it was doing this, it looked like it might start that. This flush out showed it's still weak, it's still spineless. The money's not coming in for it quite like it used to. Ethereum, also a disappointing performance. That will extend whatever is happening here a little bit longer. So we can leave it and leave it in the weeds. We don't have to overwatch it. Put some long-term alerts in case it goes lower, and if it ever starts coming back up, and forget it. It's still doing a messy, bloated second impulse. Not interesting. What else can we tell you on the crypto fronts while we're in it? Doggy, a lot of people still talk about Doggy. I don't really talk too much about it. I think it's going to turn into some cranky Elon currency, which will probably end up doing very well, but they certainly managed to keep it up. Very much a flaw. The story on Doggy is it's got very much a sort of flaw, but be warned, it's made flaws before and blasted off from them, only to run through them. So now you'd be tempted to call a flaw and a flaw again, but it gets a little bit of money thrown on it to surge it, to keep people hanging on. But it could absolutely get a bump, and then it could, wither on the vine for a while longer and go lower, like that. And then another flaw. So it's deceptive, this. It looks like it's basing, but it's a bunch of money being thrown in there, and then it's being left to wither again. A bit of peg control here. It's almost central banker-like. It points to being manipulated and controlled by a big force to me, because there's that. Then some folk will talk about XRP. Didn't do particularly well out of this as well. I think its stock came down hard, but in terms of dominance, it is coming off a very low range. So it's broadly on the weekly and the daily, XRP's dominance has actually improved slightly, but it didn't do great. It's still not showing massive relative strength. Is being bid up from the low here at 43. But it's a bad spill. The one that did impress, that I will leave you with, apart from BTC, has actually been Tron. So Tron has been impressing. A little bit of a left shoulder there. This might be a huge right shoulder. Will it keep walking out? We'll see. We'll let it do what it needs to do, but it went far less down. Don't forget, this is in an environment where Bitcoin is being the main beneficiary of dominance at everybody else's expense. Most other alts you look at are bleeding out relative to Bitcoin. So you can even have a look at, see how it's done relative, none of the weaklings, and you can see it's actually still getting a bit of a recovery. But that said, it's in one of these as well, another one of these. We're getting a lot of these structures. As we say, they are bullish, but they're the opposite of the squeeze. You've got to get volatile. You've got to have wilder swings before you let go. We were super low vol there. It's the exact opposite of the volatility compression. But they are both continuation by design. But I prefer the super low vol you get there, stop loss there, enter there, ride it up there. Here, it's a harder trade. It's got to keep going. It needs to get to the other side again and then wind up to break those technical levels. And that calls for the alt run to come. So still got some work to do. But not every dominance alt is going down, but most are. Yeah, so some want to talk about LTC. Yeah, okay. So I'm going to finish on Litecoin. I hope this has been a useful update for you. I think, so what's the summary? Somebody was asking for Litecoin. We'll just quickly show him. Against BTC, this is a bleed out. You don't want it. You don't want it. It's a long-ass bleed out since 2018. That's a complete loss of relevance. It doesn't really matter what it's doing against Tether. If you're taking the risk of being in the crypto market, you should be comparing it against Bitcoin. So Litecoin, garbage. Sorry, garbage. Old horse, old hat. questionable value, probably due to taper off for a very long time. So good. Yeah, so final comments, guys. It's not necessarily as bad as it looks right now. The people are talking about absolute numbers. It's not necessarily as bad as it looks. We need to watch the key markets, oil. That's going to tell you about whether war is getting heated up or whether the demand destruction is the game. This will tell you. You've got to watch the debt markets. You've got to watch gold. I do think gold will come out of this well. So my prediction, buy gold on the dips. Investment, pure gold link below. And if you're in America, ITM trading, link below. Get locally in the States, delivered to you. Get gold during this period because it's going to protect you against debt collapse. That is a mathematical certainty. It will go up when the debt collapses in all currencies, as you've already seen. That is one of the safest. Don't rush down the risk to try boost returns to make more money. Take the dominoes as they fall, and there's a while, the stage is long. This is a big old game that's going to play out. It's going to play out possibly over a decade and a half. 2030 is their target, 2035 before they've put in their whole slave system and all the properties are registered on the blockchain. This is not going to happen overnight. You've got time. Gold is God market. It's the anti-fiat. Anti-fiat is anti-debt. Money is borrowed into existence. That's the simplest trade. It's a gold bull call. In crypto, go with the dominance of Bitcoin as well. But just be sure there's less forgiveness if you get it wrong and there's another stage sell-off. You can lose half on Bitcoin that you might not lose. My guess is this is going to be a localized low is my guess. If I look at that messy chart that it be, I feel it's going to be a localized low. So I think there is, for the higher risk and people who understand mismanagement and are getting a value with stops, you might pick off some pretty good entries here. However, just as we said, there's a demand destroying event. You can't be sure that doesn't happen. Or even just a weak rally and the next stage doesn't happen. So you've got to measure that loss. And, it's a new low the minute it runs that wick low. That's a fact. So you've got to be careful. Where's that entry? 53 is a long way from 48. So you need to pick and trade it smart. And I'd say it's safer you win gold because the volatility is far less. Traders lose money in volatility moments, high volatility moments. They make money in low volatility to expanding volatility moments. That's where HVF, Hunt Volatility Funnel Method, comes in. Okay, till next time, look after yourself. Don't get miserable or depressed. It's all good. We're going to live great lives in spite of everything, and we're going to build wealth in reset season. To book a call, hit that first link below. Just the self-studies available at the moment. But you can upgrade. You'll have a 6-month window. Everyone will be given a chance. At some point, we'll open that up again. But what do you get? You get all the content, all the learning. You get to deep dive on that. You get your Sunday webinars with us. You get the live trading days every month for 6 months. And you get all the recordings of those same live sessions with the interpretation of the market, which will look at some of the things that the community is looking at to give you a little bit of an idea as well. All of that is in there, a lot less, and we do payments for that. And of course, you have a 14-day money-back guarantee. So don't forget all those things. We try and make it easy for you to participate. So already much lower price threshold that can be split 3 ways over 3 months. And you can get on. And you can start the process and then later upgrade from there. Until next time, play safe. You'll be fine. Markets, we'll see how it goes. A little bit of a calm now. Let's see if we get a snapback rally on the potential of those rate cuts. What will the Fed do? Or whether it's going to be a weak, slightly concerning rally that could be sold off for another leg. Till next time, we'll catch you later. Bye for now.